Hi friends, welcome to Konexio Technical Insight. I'm Rahul Randeria and I will be conducting today's show. Today we would be discussing regarding the trends, the setups, the technical indicators, the candlestick pattern, the derivative data of Nifty, Bank Nifty, as well as the different asset classes. Now, first of all, let us discuss what we have mentioned in our last video. In our last video, we have mentioned that the markets were overbought, some sort of tiredness, some sort of exhaustion was seen. We could see some sort of profit booking coming in at the higher levels. So one should trade cautiously and one should avoid going long as of now from these levels. And we were expecting some sort of correction, slight price correction, and a consolidation for the week. So before starting the video, a general disclaimer. This video is only for the educational purpose. Please consult your financial advisor before investing and trading. Now let us go to the Nifty daily charts and let us discuss what could be the trend for the next week. You will see on the screen the Nifty daily charts. We have been discussing regarding this upward rising channel, making higher tops, higher bottoms since last couple of weeks or couple of months. You can see the prices last week just took an attempt to break this particular channel on intraday basis. It though ended on a negative note, but on Thursdays and Friday, again market slowly and gradually bounced a little bit and ended on a positive note as of on Friday. So Nifty ended near 21,710 mark. So again, at this juncture, 21,500 is the very crucial support, which is the low of Wednesday's candle, swing low of the Wednesday's candle. So until and unless markets sustains above those levels, then market would remain volatile and would consolidate or might see a time correction or a sideways movement. But as of now, it seems that in the last two trading sessions, maybe on Thursday and Friday, what we have seen that market did attempt to rally higher, but we there was a lack of follow-up buying, and just ended on just a flat note, maybe with 50 points gain on Friday. So definitely, still some sort of cautiousness is there in the markets. Again, on the Friday also, the U.S. markets traded maybe slight to flat note because there was payroll data, job data. So definitely, U.S. markets were also uncertain. They traded for a positive trend throughout the day, but again on the end of the day on Friday, U.S. market also ended on a flat, very flat note. So again, some sort of selling was seen in the U.S. market also. So most probably on the technical perspective, on the technical setup, again we feel that until and unless Nifty sustains about 21,500 mark, there is no weakness. Yes, there could be a time consolidation where zigzag movement could be seen, sideways movement could be seen. But the moment Nifty closes below 21,500, then there are chances that Nifty can drift down to the levels of 21,000, which is the horizontal line you can see on the charts, first horizontal line below 21,710 mark, which is 21,000 mark. Once it breaks 21,500 levels on closing basis. So friends, now let us go to the supports and resistance level in Nifty for the next week. The first support in the Nifty is placed at 21,564. Second support is placed at 21,477. And third support is placed at 21,329. On the upside, the first resistance is placed at around 21,835. Above that, the second resistance is placed at 21,944. And above that, the third resistance is placed at 22,122. So these are the crucial supports and resistance level in Nifty for the next week. Traders should just try to follow or just watch out this level and trade accordingly in the direction of the primary trend on the lower degree charts, maybe 30 minute charts or hourly charts. So definitely, as of now, the trend would remain, or we are expecting a time consolidation or slightly price correction. Market might remain range bound at this juncture. Support will come at the lower levels, and again, follow-up selling or resistance will come at the higher levels, maybe around 21,750 to 21,770 odd mark. So Nifty might remain in this particular range. So as I said, 21,500 should be watched and monitored very closely on closing basis. If it breaks, then Nifty might go down to the levels of 21,000 mark. This should be the view for the next week. So friends, now let us discuss the derivative data of Nifty calls. You will see on the screen the Nifty calls. The action was seen in 21,800 calls, then 21,900 calls, 22,000 calls, and 22,100 calls. Now we are looking at with the volumes and open interest. You can see that on immediate basis, 21,750 and 21,800 could act as an immediate resistance. So if Nifty closes about 21,800, then there are chances that Nifty can rally towards the level of 22,000, between the 22,000 and 22,100 mark. Now here you can see there has been a rise in the open interest, rise in the volumes. The implied volatility is low. It is between 8.27 and 9. There is a slight drop in option premiums. So not much of out of the money option writing seen in at this particular juncture. But looking at, if we go to the level to level mark, if Nifty crosses and closes about 21,800, then there are chances that Nifty might rally towards the level between 22,000 to 22,100 mark. So 21,800 could be the crucial level to be watch out for. Now friends, let us discuss the Nifty put data. You will see on the screen in Nifty put the action was seen in 21,700 put, 21,600 puts, 21,500 puts, and 21,400 puts. Now here you can see there has been a slight drop in the option premium. That means still the smart money is into option writing, but option writing is not that much aggressive at this juncture. The implied volatility is between 10.47 and 10.87. So it is also in a very neutral zone. You can see the rise in the open interest, and in some strike prices, specifically 21,450, there has been a shedding. That means that the smart money might have started booking profits in 21,450 put after they might have done writing at the higher levels. So as I said, on the downside, 21,700 could act as an immediate support. Looking at this particular option data on basis of volumes and volumes and uh, open interest, if it breaks, then it can drift down to the 21,500, and if it closes below 21,500, then in short to medium term Nifty might drift down to the levels of 21,000, which is the psychological mark. So as of now, maybe for a Monday or Tuesday, we might see a range bound movement where selling pressure might come in at higher levels, and again buying support might come at the lower levels. So definitely it is going to be a difficult task for the traders to trade. But as of now, again I would like to caution at this juncture. If Nifty closes below 21,700 mark on immediate basis, then there are chances that we might see correction coming in from those particular levels. So friends, now let us go to the Bank Nifty daily charts. On the Bank Nifty daily charts, you can clearly see again, this was the rising channel which we have been discussing since last couple of weeks. Again, there is again a channel in the rising channel where the prices are hovering in this particular uh, inner channel of the rising channel, where Bank Nifty took an attempt on Friday to break that particular channel, but it was failed, and it ended slightly on the downside below the upward resistance trend line. So definitely again, Bank Nifty was traded sideways for the week. So until and unless Bank Nifty doesn't breaks this particular channel, the inner channel, we might not see the extension of rally from this particular consolidation phase. As of now, the RSI is still with negative crossover, so one needs to be cautious. If Bank Nifty breaks Friday's low, then one needs to be worried about. So now, friends, let us discuss the supports and resistance level in Bank Nifty for the next week. So, friends, the first support in the Bank Nifty for the next week is placed at around 47,822. Below that, the second support is placed at 47,781, and third support is placed at 47,202. On the upside, the first resistance is placed around 48,382. Above that, the second resistance is placed at 48,636, and third resistance is placed around 49,122. So these are the important supports and resistance level in Bank Nifty for the next week. Traders should just watch out this level and trade accordingly in the direction of the primary trend. And the trend, primary trend could be sideways to uh, highly volatile for the next week. So one needs to trade with strict stop losses. So friends, now let us discuss the derivative data of Bank Nifty call. Yes, this is the Bank Nifty call data. Here you can see the action was seen in 48,500 calls, 49,000 calls, and 49,500 calls. The most important thing is that there has been a significant drop in the option premium, which means the smart money is into writing after the money calls or writing the calls. There has been a rise in the open interest, rise in the volumes. Implied volatility is between 9.28 and 12.6. It is slightly in the risky zone. It is not in the danger zone, but it is in the risky zone. So if there is a positive opening, then it might uh, go into a danger zone. That is the word of a caution at this juncture. So on immediate basis, if Bank Nifty crosses 48,500 and closes above those level, then only there are chances that Bank Nifty might rally towards a level of 49,000 and 49,500. But at this juncture, 48,500 could act as a major resistance. Looking at this particular open interest concentration. So definitely on immediate basis, on the basis of volume, 48,300 could act as an immediate resistance, and on the basis of open interest, 48,500 could act as an immediate resistance. So I will take it the open interest part. So if it closes above 48,500, then we might see the extension of rally. So friends, now let us discuss the Bank Nifty put data. In Bank Nifty puts, the action was seen in 47,000 puts, 47,500 puts, 48,000 puts, then 47,500 puts, and 47,000 puts. Now here you can see the important thing is there has been a shedding in the open interest change in the open interest. That means the smart trader are already uh, they have already started booking profits when they have done the writing of the Bank Nifty puts. This is not good sign for Bank Nifty. So these are the signs of weaknesses at this juncture. So now what to do? So just we need to watch out the immediate support on the basis of volume and open interest part. So 48,000 could act as an immediate support. If Bank Nifty closes below 48,000, then there are chances that Bank Nifty can slip down to the level of 47,000 in next couple of days. So definitely one needs to be cautious looking at this particular shedding in the Bank Nifty puts. There has been a drop in the option premium also, but this drop is not that much strong that we might strongly believe that the undertone is bullish. But this a slightly drop in the option premium and shedding in the open interest is clearly indicating that smart money has already started booking profits, which they have started when they have started writing Bank Nifty puts, and they are now started booking profits at this juncture. This is a sign of the weakness. So one needs to be cautious at the higher levels. If there is a gap up opening or a positive start, then we might see selling pressure coming in at the higher levels. So friends, definitely looking at the charts and the derivative data of Nifty and Bank Nifty, we feel that next week is going to be challenging. It is going to be zigzag move. It is going to be highly risky. Uh, uh, those who are long should trade with cautiousness should be nimble footed, should try to book profit those who are long in Nifty and Bank Nifty. And as I said, look out or watch out for these particular strike prices, which we have discussed. Once those strike prices are taken out downside on the downside decisively, then one should start or look out for or watch out for short trades. So, friends, let us come to the final segment of our show, which is positional call. And I have identified one stock from the energy sector, the renewable energy sector. The name of the stock is Borosil Renewable Energy. Now, here you can clearly see the stock has given a breakout from congestion range of last two and a half months, almost two and a half months. Again, you can see RSI is making positive divergence. The price volume action is showing strength or signs of the reversal at this juncture. Currently, the stock is quoting around 482. Any pullback might bring in support at the lower levels. So you can see the breakout was supported with very strong volumes. So now long-term investors, swing traders, short-term positional investors can accumulate the stock on dips to 466 for an upside target of 540 in short to medium term. So short to medium term, maybe for the time period of maybe next 3 to 4 months. So definitely the stock is giving or showing some strength of some sign of reversal, which is positive. Any dips should be used to buy or invest on corrections. Again, I would like to repeat the levels. One should look out for the stock on dips to 466 for an upside target of 540 in short to medium term. So, friends, thank you very much for watching the show. Any suggestion you can give in the comment box, and have a nice trading week. Thank you.